Okay, so as you'll see, I just did a previous video. I'm going to throw it up over here, put it in the eye. I was talking about quite an interesting way of how to manage your risk better when trading in losing positions on FX trades. Now, this is something we all land up in. It was a bit of a long video, but I was able to press on some really, really great points about how I'm managing my risk in an actual losing trade, how I showed everything about it. I showed exactly what I'm going to be doing next and how you can also learn from it. But part 2 of this video is going to be showing you a bit more about the trader talk that we make use of every single week, where we talk about different strategies, different trades in the market, trade ideas, news in the market. And what it allows myself to do is sit down and talk with all of my students, my traders, and make sure they are preparing for the week going forward. Now, that's why we do it on a Sunday, so that they can get themselves prepared. They can have a look at what's available in the market and then trade it for that week going forward. Now, this is something only my Academy students have access to. I train students in over 28 countries around the world. We run an online training academy with mobile apps, internet access included, and it's a pretty extensive academy where we turn people into top level traders, what we like to say we do, and so far so good. However, if anyone wants to find out about that, you can go up into that video over there. You can have a look about the full explanation of the academy. I'm not going to worry about explaining it right now. You can go and have a look at that video, but this video is going to be showing you a few things from this talk that was really, really important, that also relates back to the previous video I just did. I literally just filmed it. Make sure to go watch that video as well, but this video is showing you some really great pieces of the Sunday Traders Talk and how we are using it to communicate with every single one of our students. Now, coming up, we're going to probably upload a few more pieces from the Sunday Traders Talk, allowing you to learn more about it. However, make sure to enjoy this. This is talking more about risk and how to manage your entry exits on these positions, where to set your target profits. I hope you enjoy it, and I will make sure to see you in the next video. Cheers for now, everyone. Moving on to the last trade idea. So we've got 3 slides left and then we'll be done with the talk. So we actually probably will end on a 1-hour talk. So congratulations on that. I'm getting a bit better with my time management. But going on to this is also going to be a new trade we're talking about. However, this trade is already executed and moved past its entry point, which I'll explain as well. So a few points: stochastic level strongly oversold, MFI oversold as well, TSI strongly oversold to historic lows, historic support level test as well. So you can see historically it's tested this level multiple times, and then multiple oversold indicators provides conviction. Conviction meaning not proof, not a justified fact, but a conviction meaning you understand based on your belief. So we really can't predict what's happening in the market. However, we provide a conviction that the market is strongly oversold. So just jumping onto the charts here, I'm enjoying using the charts today. As you can see, try and ignore all of this because this is going to be the interesting. Actually, you know what? I'll make you ignore it. Oh, I actually need to use this chart anyway because I've got the TSI up. So just, don't look at all of this stuff. This is going to be in the next slide. However, we have the market moving down. We had a perfect execution on this point. I didn't really even get the opportunity to add as much risk as I wanted. So although, the market has moved into a profit, I'm just going to have a look here. Yeah, CHF JPY only got an order in for 4.61 lots and 4.51 lots on my MSC Alpha account, which is my South African Rand account. My other portfolios have got a bit more risk added to it. Let me quickly have a look here. So on my pound portfolio, yes, I've got a considerable amount more leverage added. So I've got 2 orders that are a lot higher, that are in a really good amount of profit, close to about 1/3% profit, which is really great, including all of the other trades I've got, puts it just over 1/3% on a single trade. So if I have all of these trades play out over the long term, you'll see over here, this is my pound portfolio. You can see I added to the position over here. So if I have a look at that, my projected profit on this is around about £195 if we move to the upside. So that's really, a good amount of profit for me. Although the account right now has just added another £100,000 to the account. So now I'm going to have to leverage my positions again and focus on actually making, a much higher level of profit. So, that's a big one for me. I'm going to have to focus on re-leveraging all of these positions, which, as a fund manager is a fun thing to do, but although difficult when it manipulates the profit of your current positions. So really on this position, we're past the entry point. So, don't try and jump on this trade unless you want to be very brave, because, if we've got a profit margin all the way to this upside, I'll explain where my targets are going to be set as well. But the stochastic strongly oversold. The MFI went to those oversold levels as well. The TSI sitting at historically oversold levels as never seen before. So it's lower than ever seen before. So I'm very optimistic about the progress of this trade. I really think that we're going to push into a higher level here. So let's quickly go on to the grand finale of this. What I wanted to talk about is this. So you'll be able to have a look at this and say, but one of these shows a failed breakout. I'm quickly going to show it on the graph here. This is the trade we've just had a look at. What you can basically see here is we've got the market moving oversold and then the market pivoting all the way back up really nicely. So, it's a, trade that we've constantly looked at. The reason why I keep using repetition on this is because slowly but surely I'm building you by indicator by indicator. Now you can see we've just introduced the the TSI, and slowly but surely I'll build in with each trader talk we do new fundamental strategies, new technical indicators. So these videos are not only updating on the week, but are terribly educational, which I love doing. I love being able to use these days to educate all of you. So please focus very carefully on these. However, as you can see, so stochastic oversold for an extended period. So you can see it's been gapped for an extended period, and then the market pivots and moves higher. And now again, we have the exact same thing happening, and the TSI being nicely oversold as well. However, you can see this red zone, which I wanted to focus on, is the market did not pivot, even though we had confirmation. And I said here, only failed price pivot found. Now you can see the market pivoted, moved nicely oversold. The MFI did its job. The TSI did its job, but nothing really happened. Now this does happen. It's not the end of the world. Sometimes it does happen. And I'm sure the question you're asking yourself is, how do I manage my risk when I get into the position, everything's lining up, however, I lose the money? This is basically what I wanted to show you. And I spent, a bit of time working on this, but I quickly want to walk you through this. So the one failed oversold level can be considered. No matter how perfect this strategy may seem, there will always be moments when oversold market will continue to fall, and vice versa, overbought market will continue to rise. Like I showed you with USD CAD on the monthly chart, you just had months and months and months of the market staying fully overbought, and it can really break you and damage your trading account. This is why we always focus on taking low risk positions that do not overexpose our accounts to losing more money than we would like. How would we assess how far the market could possibly fall? To the next slide. So this is going to be a slightly more complex one, but I'm going to walk you through it piece by piece. So to start out with, let's quickly have a look at the CHF JPY chart. Okay, so over here, what you can see is we have got basically a price prediction example. So the market has fallen here by 574 pips. So we took the previous trend, we took what happened previously. So the market fell by 574 pips, which we can measure, and then basically pushed all the way to the upside. So you can see the market pushed up here and then broke back down slightly, formed a bit of a teacup curve. And then basically it almost looks quite similar to Bitcoin right now, that price rise back to $7,000 and then move back to that upper level. Now again, what we're basically seeing is the market has fallen by 434 pips, and now we're trying to predict the future market performance. However, look back here, what do we see here? We see the market has fallen to this level. If we take this point, so where the market has now pushed to this level, so I took basically the exact center point of the stochastic. So if we got in on this point right here, you can see that the market has fallen by X amount of pips. So it's fallen by roughly 585 pips. However, never fell, never moved back to that level, literally never tested it, and just continued to fall. Now, when I take this orange square, what am I doing? I'm basically measuring the exact half distance of this. So what's the exact half distance of this shape? I'm basically using it as an orange shape. So what does this mean? So I now know if I take this shape and just control copy, I can copy it all the way down here. So I'm just quickly going to remove that. So what have I done? I've copied the half distance. I've put a horizontal line there, and I've copied the full distance, and I've put a horizontal line lower down. So what do we know? The market fell by more than over half its price value before returning back to that level over here, never moving back below this level. Okay, so never moving back below the level, and then spiking back up to test almost all the way fully to the upside of this resistance level. So what does this mean? The market broke this level, never returned back, however, never fell more than the full distance from the previous high to where the stochastic showed the market was oversold. So this distance, so from previous high down to stochastic level, continuing to fall, but never fell more than the full price distance, because you can see over here, full price distance is way, way low down. So never fell to that level, fell just beyond halfway. So it fell close to 3/4 the price distance, then returned back to close to the entry point, which would have allowed you to add to the position lower down and then cover slightly higher up. However, never moved lower than that, because you can see price was regathering, making higher lows and slightly higher highs, and then moving all the way back to that level. So if you took the position, was able to manage your risk very carefully and hold the position, you could actually have made it all the way back up to that previous high. But it doesn't always work that way. Sometimes the market moves slightly higher and then breaks down immediately, as we saw over here. If I didn't get out of this position, if I thought, oh, the market is going to return to this level, I would have been holding a massive loss, because the market has continued to fall. So from time to time, it will happen. From time to time, it won't. But that is why we showed this. So based on your risk analysis, as you can see, I've used half target distance. So basically, I've taken what I did previously. So these green and red zones. So the green is showing the full distance from the high pivot to the low point. And then what I'm basically doing is control copying, pulling it down to the bottom, and then showing my exposure level. So let's say, for example, I know the market would move down to the half stop distance. That's half the distance of the trend moving lower. Then what I'd be able to do is say, okay, well, I want to measure my risk based on, I don't want to lose more than 1% if the market moves to the half stop distance. So what I'd basically do is say, okay, what's 1% of my account, and then divide that into the number of pips the price can travel. So if the price travels 500 pips and 1% loss in my account is $500, then that means I must be risking $1 per pip. Very simple, and you'll learn this in phase 3. So if it doesn't make sense now, it will make sense in phase 3. Then moving lower, what's the full stop distance? Well, it's double the price execution. So hopefully, as long as I didn't leverage my account too much, it would be double the loss. So meaning a 2% loss, which means a 2% loss is not the end of the world, but I would still be able to monitor my risk. So as you can see here, we had the price moving all the way down low, pierced this level, and then move straight back up. So we did have the price move slightly lower to the half stop distance. So if our stop loss level was set within that distance, there is a risk we could lose it. So the whole goal, firstly, calculate your risk based on a half stop and a full stop. So that makes sense, I'm sure. And then focus on making sure your stop loss level is not too close to that point. Or for example, with myself, I try not to trade with stop loss levels because I know the market will spike it from time to time, but that is only because I am always on the charts trading. If I was not on the charts trading all the time, I'd be very cautious about doing that. So please make sure trading without a stop loss is very, very dangerous if you're not a really good person when it comes to trading. If you're not a professional trader and have a good amount of experience in the market, I've executed thousands of trades. So, I'm able to have the license to do that, whereas for yourself, you need to be very, very careful. So that is basically the end of it. You know, this is definitely what I'm looking at, you know, in terms of my risk. I have a suspicion the market is going to move to the half target distance. If it moves there, I might get out. And this is really what the euro pound was. On the euro pound, just going back to that, you can see basically we had the market move higher. It moved to my half stop distance. So if I show you here, if I take this from the high to the low, I'm just going to do this very roughly. So I'll literally just take that. I'll select it so I know that this little dot here is the exact half point. And then what I'll do is I'll measure that up. I'll put it there. So there we go. That's my half stop point. And then what I'll do is I'll just take a trend line. I'll make it nice and horizontal. And then I'll draw it from this point up to this point, up to this point. So what does that show me? When the market pushed to this level, I got out of the position, and then the market continued to move higher. So for myself, job done. I did my job, I did what I needed to, but at the end of the day, the market could have moved higher. Doesn't matter, that stuff does happen. So once again, everyone, this is the end of week 2, May Sunday Traders Talk. Hope you enjoyed the talk. We covered a really good amount of ideas. There's not going to be any assignments for this, but there will be an assignment coming out for the next talk. I hope you enjoyed it. Make sure to watch those trades closely. Any new trades you come up with, you can send them through to me. Let me know what you think. I'll give you my input. And then any new trades, make sure to follow the Twitter page. Keep updated with that. Make sure to read your news every single day. And once again, everyone, this will be posted out over an email. There will be a link plus a link to the Dropbox folder. You can download the PDF, the graphs, and then the video will have access. And then on top of that, everything will be uploaded to the Sunday Traders Talk archive for you to access for future reference. Once again, everyone, hope you have a great weekend going forward. Happy Mother's Day to everyone. Hope you have a great day as well. And I will see you in the next video. Cheers for now. Okay, so that was the end of that video. I hope you all enjoyed it. And once again, like I said, if anyone wants to find out more about how to study in the MSC Academy, you can email study@msequitiestrading.com. You can ask more about how to join the Academy. We'll send you all the details, and then we'll get you started. You can also go to www.msequitiestrading.com to find out more, and we will be able to get hold of you and find out how we can assist you and if joining our academy is going to benefit you in the long run. Now, once again, everyone, thanks for tuning into this video. Leave a thumbs up if you thought it was helpful, and also subscribe to the channel because we're uploading content every single week. Once again, thank you for watching this video, and I will see you in the next one. Cheers for now, everyone.